Well, Daddy Jerome Powell ended up coming through again, guys. We had another awesome day in the stock market. The S&P 500 went up 0.6%. The NASDAQ went up over 1%. We had the Dow up 0.3%. And the Russell went up almost 2%. So today, we're going to break down some stocks, some charts, my thoughts on the markets, plus more. So sit back, relax, hit the like button, check out my Patreon down below. And guess what? M1 brought back their promotion, $50 if you sign up and deposit $100. That is also linked down below, and let's get right into it. So the markets completely went up today. I mean, I don't know what else to say. It was such a great day. SPY hit another all-time high at $465.15. QQQ hit a fresh all-time high at $393.61. And on top of that, the small caps, the Russell 2000, ended up completely breaking out as well. And now it's trading at an all-time high. Finally, considering it was in a horizontal channel, it's been consolidating for almost 1 year at this point in time. So we know that now we saw the Fed meeting earlier. Jerome Powell took a lot of questions, answered a lot of them, dodged a lot of bullets like he always does. We know that they are going to begin tapering slowly but surely. And the markets kind of ran up on that news, even though the markets already knew and it was kind of priced in that tapering was coming. But now that we got some more clarity around it, how much they're going to actually taper for mortgage-backed securities from the treasury bonds, now the markets are like, okay, we got some clarity, let's keep on pushing, right? And that's why we hit all-time highs, like I said, on the Russell, the S&P, and on QQQ. And on top of that, we have to talk about 7 stocks today. You saw the title, 7 stocks, all of which reported earnings. We'll get into that in a second here. And before we do, let's look at some technicals, right? SPY at this point in time, it's breaking out. I mean, what else is new? It's trading well above the 50 moving average, and one could argue it is a little bit overbought. I mean, we did talk about how when SPY, and you have records, I mean, we talk about this stuff every day, which is why you have to subscribe. I told you guys, if 455 breaks, this was about a week or two ago, we're probably going to start gunning for 465. And at that point, maybe 470. And at that point, I would expect a bit of a retracement, maybe some consolidation. And I'm still sticking to that. You know, we could potentially see, sure, maybe a little bit more green. But I think overall, we are due for a decent pullback. I'm not saying a 10% drop, 5% even, but maybe a 1-2% drawdown. Very possible on both SPY and QQQ. And again, I'm not saying it's going to happen tomorrow, later this week, next week, I have no idea. But just looking at these charts, guys, come on. It is a little bit overbought, on QQQ especially. So maybe a little bit of consolidation, a pullback would be very healthy overall. And let's take a look now at some stocks. And by the way, if you guys are finding value, hit the like button, drop me a comment, let me know your thoughts. And I've been getting a lot of new subscribers lately. I appreciate all of you, old subscribers, of course, and new subscribers jumping onto the bandwagon here. And yeah, let's keep on pushing, guys. I appreciate each and every one of you as always. So before we even go over these 7 stocks, Tesla is at it again. Tesla, guys, all-time high was hit. Actually, no, I'm wrong. I stand corrected. It was almost an all-time high. We did hit 1224 a couple of days ago. Today, we ended up closing at 1213, and we saw a massive push heading into the close of the day. And honestly, I'm thinking to myself, I might do it tomorrow, guys. Don't hate me, but I might trim a little bit of Tesla in one of my accounts at least. You know, I own some Tesla like many of you guys do. I might consider trimming a little bit and then raising some cash because, again, like I said, the markets are a bit extended at this point, and Tesla is very extended. So shout out to all the Tesla holders out there. It went up 3.5%, and let me know. Seriously, I want to know your thoughts. Would you trim a little bit? Did you already trim a little bit? Or would you just let it ride? Would you just not touch it and look back in 3-5 years? Drop me a comment. Let me know. And now let's talk about some stocks. And like I do during earnings season, I don't like looking at the earnings beforehand. I kind of like being surprised and giving you guys a live reaction. And look at this. Qualcomm is it's ripping, guys. Holy crap. It ended up going up 2.4% at the close, but now after hours, it's up another $7. It completely broke out of the number one resistance I was looking at least in the short term, at about 139, 140. It completely ripped through that, and now we actually filled the entire gap to that all-time high, or not the all-time high, guys. Geez, what am I saying? To the high from back in the beginning of September. And we talked about this stock recently. I mentioned it this morning in my morning update video on Patreon. So let's see what they did. They ended up doing $2.55 EPS versus $2.26 estimated. So they beat EPS. Sales, oh my gosh, look at that. Sales crushed it. $9.34 billion versus $8.86 billion estimated. So double beat. And do we have guidance? They issued Q1 guidance. Fiscal Q4 results rise as company sets fiscal Q1 outlook. Where is that Q1 outlook though? Let's see if we can see it here. Q1 adjusted EPS in the range of $2.90 to $3.10. Revenue for the quarter is pegged in the $10 to $10.8 billion range, and the estimate was a lot lower than that from the street. So that's going to be a recipe for a breakout, which again is what we're seeing at this point. We had the inverse head and shoulder we called out. We called out the break above the moving averages, and at this point, I truly believe that Qualcomm, sure, it could rip to 150 plus, but I think it's going to be trading range bound for the meantime between 140 to 145. You guys see this range, these two trend lines that I've drawn out right here? I think we could see a bit of a pullback to 140. Maybe we bounce around a little bit here. We could catch a couple trades between 140 to 145, and then ultimately it could end up breaking out from there above 150 and taking out those highs from this summer and the end of July. So Qualcomm is it's absolutely ripping, guys. What else can I say? Roku is not ripping. It's down. It closed at 313 and it barely had a green day today. It went up a quarter, which for a $300 stock, that's really nothing. And now it's down at 287 after market hours, and it looks like that head and shoulder we have drawn out here, which I drew out a couple of videos ago, it's playing out. You know, we got the left shoulder, the head, the right shoulder. Now we have a huge sell candle in the after hours. So let's see what they ended up reporting. They ended up doing EBITDA of $130 million in, that's a loss, right? Or no, it's not a loss. I mean, it's EBITDA. Jeez, guys, not a loss. It's positive. It's $130 million versus $56 million in the same quarter last year. Sales missed. Okay, there you go. $680 versus $683 million. Which was the estimate, obviously, versus the $451 million year over year. So a little hiccup quarter here for Roku, even though they are growing still in terms of revenue year over year. And okay, look at that. Guidance is lower. They see Q4 total net sales of $893 million versus $944.43 million estimated. So they missed revenue for this quarter. The next quarter, revenue guidance is lower. That is not good. The stock is getting hit. And if I pull up the year chart, you guys can see here, now we're trading more towards the bottom of this downwards channel that we've been in pretty much since the end of 2020 and the beginning of 2021. So I think this one is now pretty oversold. And now that they reported bad guidance, bad net sales for the previous quarter, there might be volatility. There could be more red in the short term, so be mindful of that. But if you have a longer term horizon, let's say you're looking a half a year out, a year out, and you think this company could end up rebounding, now might be your chance to pick up some shares while it's at these very suppressed levels. Now that it's under 300 a share, guys, it is down over 40% from the all-time high that was hit just a couple months ago in July. So it's in a bear market, well into a bear market, and it's looking very bloody. You know, it's let's be honest, it's looking very bloody at this point. So let's look at Etsy. I want to see what they reported. That's the next stock here that I have on my list. ETSY, they're also selling off. They closed at 239, and now they're trading at 233 after hours, just about 9-10% off those all-time highs that we hit just about a week and a half ago. So let's see what they reported. Let me pop up this live news tab. They beat EPS, okay, not bad, 62 cents versus 54 cents estimated, and sales came in at 532.43 million versus 518.86 million. So they beat EPS, beat sales. So you may be asking yourself, why is the stock down? Well, listen up. Q4 sales, they see 660 to 690 million, which is on the lower end of the 689.94 million estimated. So lower than expected revenue guidance for the next quarter. It's not too bad. Well, and now it's actually going down a bit more. When we first started talking about Etsy, it was 233. Now it's at 229, 230. So it's down even more. And quite honestly, it's not that bad. I mean, it's not that bad of a guidance miss there. And the stock, believe it or not, is still holding the uptrend. We're still at a higher low above the 180 moving average, which, judging on this 4-hour chart, that has been support since the middle of June, which at this point is almost, 5 months ago, 4.5 months ago. So Etsy, I wouldn't be surprised if this were to maybe rally above 220, at least in the short term. So keep an eye on it. Let's see Fastly. This is one that's been in the dumpster. It's a dumpster fire stock, at least right now. So let's see what they did. Real time. Well, look at that. The stock actually ran up 8% on the day at the close. It went up exactly $4 per share. And now it's up even more after hours. It closed at 53.30. Now it's at 56.20. And whoa, look at that. It actually ran up all the way. This is why planning out your supports or plotting them out, resistance levels, support levels. A lot of people might be like, oh, it's a bunch of BS. Trust me, guys. Technical analysis is legitimate, especially if you use it alongside a fundamental analysis. I mean, it's a game changer. You guys really got to get good at this stuff because, look, it ran up exactly to that high point from the end of June, and we got rejected there. Let me show you on the intraday chart. It ran up all the way to $65 once they reported. Now it's down to 56. It's holding the uptrend. It could make another shot to 63, heck, maybe in the aftermarket hours today or maybe even tomorrow. So technical analysis is legit, guys. And now, before I get on a little side tangent, let's see what they reported. They see revenue of that's actually 2021, between 347 and 350 million. So that's guidance. They did about, what was their revenue? 86 million in Q3. Not bad. Adjusted loss per share of 11 cents and unadjusted was 48 cents. So I'm not seeing any estimates here in terms of what they did compared to the analysts, but let me tell you, it's got to be a surprise considering this stock that's been beaten down so aggressively is finally seeing the light at the end of the tunnel. It's running up, and I'm telling you guys, if we break 63, whether it's tomorrow, the next day, next week, I'm telling you, if this breaks, we could see a nice push 70, 75 plus, and that could be the real breakout spot for Fastly. And mind you, this stock was $136 in the end of 2021. That was a little bit over a year ago, back in October 2020. Or did I say 2021? I meant 2020. A bit over a year ago, it was $130. So it does have some ways to go. And I'm not saying it's going to get back to that 130 level. That's a bit unrealistic. But 70, 80 bucks, not so much so in terms of being unrealistic. So let's take a look at Skillz, SKLZ. This one also reported earnings today, and it's not doing much after hours, even though it did go up 7% at the close. It closed a little bit under $12.50. Let's see what they reported. They ended up doing, let's see here, guys. I'm not seeing anything. Well, maybe we're not seeing the earnings yet. Did they where is it, guys? Let's see here. Bear with me. I'm not seeing anything yet. Actually, wait a second. They did adjusted EPS or EBITDA was 41.7 million in the red. Cash on the balance sheet, 540 million. What's their sales? Gross profit, 94 million in the third quarter, up 66%. From the prior year. Revenue, there we go, 102.1 million, which is up 70%, and that was driven by the 47% growth in paying monthly active users, which is big. So, okay, 70% growth year over year revenue. That is solid. The stock is down a bit on the news, but overall, it's breaking out. Look at this. We're trading above moving averages. We're seeing a golden cross, and we're actually at a multi-month high. I mean, it's not like we're at a 10-month high, but we're trading at a 2-3-month high at this point. And I'm thinking if $13 breaks on this very beaten down stock, guys, we have a lot of gaps to the upside to fill. So 13 being that high from the end of August, if we break that, and I'm going to set my alert, I'll probably put it at 13.50. I want to see a clear-cut break above 13 into the mid-high 13s. So if we start breaking out of there, this has runway, 17, 18 per share. And you guys know, I mean, this is one of Cathie Wood's stocks. And actually, I don't want to say for sure she still owns a lot of it because I don't really track her moves as much as I did months ago. But last time I checked, at least, and you guys can correct me in the comments, she did own a lot of Skillz. So, yeah, that's the report there. Not too bad. Fun, F-U-N, Cedar Fair. I like this chart a lot. We went up 3% at the close, and they might have reported pre-market. Yeah, they reported pre-market. And what I'm seeing here, before we look at their earnings, I'm seeing an inverse head and shoulder. Left shoulder, head, right shoulder, trading above the moving averages, golden cross, all that good stuff. I think this, based on the chart, could end up hitting the highs from middle March, 52, 53 bucks. I think we could even take those highs out. And let's see, I did glance at this earnings company. I cheated a little bit, guys. I glanced at these earnings a little bit, and we can see here they had a double beat, and a great double beat at that. 260 EPS versus 245 estimated. Sales came in at $753.4 million versus $663.44 million estimated. So double beat for Cedar Fair. And you guys know, I mean, as we're getting out of the pandemic, people are more comfortable going out and about, which, let's be honest, most people are already comfortable doing that. Cedar Fair is going to be a winner. You know, it's already recovered quite a lot from the March lows of 2020, that is, and it's got more room to run. You know, if it breaks 52, which is where the inverse head and shoulder would complete, we break out of there, we could start moving mid-high 50s, 60s, no problem. So the last one for today, before I wrap up the video, guys, make sure you all hit the subscribe button, hit the like button if you are all, if I can even talk, if you guys are finding value in the video, right? Let's talk about NCLH, because this is one that we were talking about a couple of videos ago. And it's a cruise line company. You know, we had RCL report recently, Royal Caribbean. They ended up running up. Today we had Norwegian Cruise Line. Wait, before we look at that, when's CCL reporting? Well, they actually already reported about a month ago, a little bit over a month ago, so scratch that. Let's go to NCLH. You can clearly see this one is now, with today's green day, it went up 2%, by the way. It's now trading above both moving averages. We are holding the uptrend on this 4-hour chart, and there's a clear-cut gap to fill up to 30 bucks, 29, 30 bucks. That's where I think it's going, which is what the high was, where the high was back in the end of September. So let's see what they reported. First and foremost, they're still losing money. That's not that much of a surprise. I mean, let's be honest. And they are seeing a lot of demand in the back burner, in the backlog, whatever you want to call it. So in 2022, 2023, I think these companies, cruise lines in general, they will do well. So for this past quarter, they lost $2.17 versus the $2.09 estimated. So they missed EPS, and then sales also missed $153.1 million. Hold up, guys. My throat's getting a little chalky here. Nothing a little coffee can't fix, right? $153.1 million versus, oh, there we go again. Woo, a lot of you guys tell me, Stas, you got to drink water before your videos. I do drink water before my videos, but I do all this in one take. So bear with me. $153.1 million versus the almost $200 million estimated. So double miss for Norwegian Cruise Line. And they're still burning a lot of money. I mean, the Q4 monthly average cash burn is set to increase to $350 million. So imagine $350 million bucks being put in a furnace, gone, poof, burnt. That's what's going on with NCLH, right? And in terms of demand, do we see anything here? Cruise line advanced ticket sales of about 1.7 billion as of September 30th. So we do have a bit of a backlog there. And overall, a lot of these fleets are going to be back up and running very soon, guys, for the majority of the fleets. And, oh, wow, look at this. I just saw this. For Q3, they burnt $275 million a month. So that's going up to $350 million a month in Q4. So, again, this is a company that is going to come back, in my opinion at least, and they're going to recover from this crazy past couple of years, 2 years almost, that we've been seeing. So if you have patience, go for it. If you don't, stay away. Now, what else can I say, guys? So that's pretty much it. Hope you all enjoyed the video. If you did, hit the like button, subscribe, drop me a comment, and check out my Patreon. If you guys want my buy, sells, call outs, morning update videos, and more access to me, literally everything I'm doing is on Patreon. That's linked down below. And make sure to also get your 50 free bucks. You heard that right. M1 bumped up their promotion from 30 to 50 bucks. So if you haven't done it yet, use my link, deposit 100 bucks. We each get 50 bucks. Boom, free money. You could also get 2 stocks from Webull, also free money. Both of those are linked down below. And if you want a bit more insight on the Fed meeting, I made a video earlier. I'll pop it here. Check it out. I'll see you guys there. Thanks for watching. Again, as always, keep crushing the markets. Stay safe out there. Good luck tomorrow. Peace out.